Welcome back to India Global Forum, and this session is entitled Inclusive and Explosive, Fintech's Impact on India's Growth. We know now, we've just been hearing from our guests in the previous session about India being one of the fastest growing fintech markets in the world. As of last month, the Unified Payments Interface set up by the Indian government in 2016 processed over 3.5 billion transactions worth $87 billion. Fintechs have raised over $10 billion, and international fintechs are coming as well. UK companies like Revolut and Tide have recently set up offices in India. So we've got a panel here for you in the studio. But first of all, joining me to discuss this is the CEO of Niti Aayog from the government of India. How are you?
Wonderful. How are you?
Very good. Thank you so much for being with us. CEO of Niti Aayog, Government of India, Amitabh Kant. So tell me, first of all, how you see the investment climate for India. Are the effects of COVID-19 dissipating now?
Right now we've today crossed the 1 billion mark as far as COVID vaccination is concerned. We've done almost 40% of that with double doses. Now this is more than the population of Indonesia or Brazil. So we've managed to so far evade the third wave, so to say. And I think it's vaccination which is keeping it going. And this has seen a huge movement forward as far as economic activity is concerned. We foresee a huge V-shaped recovery of the economy, and I'm quite hopeful that we will record a double-digit growth this particular year.
Tell me, what do you think has strengthened India's position as a global fintech hub? What are the factors that have made it into such a success?
Well, let me first say that India has all the ingredients to drive the global fintech revolution. As it presents, to my mind, a number of use case scenarios where new models of lending, insurance, payments can all be developed, scaled, and then spread across the world. We have a very robust digital infrastructure, and during COVID, we were able to transfer relief funds directly into the bank accounts of beneficiaries. Digital payments have seen tremendous growth. We started at the bottom of the pyramid in building India as a global fintech hub. We took a massive drive towards opening bank accounts. Since 2014, over 460 million bank accounts have been opened. These bank accounts have then been leveraged to transfer government benefits directly without any leakage. A key enabling factor has been accessibility in terms of availability of cheap devices to take people online, as well as access to low-cost, high-speed internet. With the cheapest data rates in the world, the proliferation of startups, not just in payments, but other domains of fintech across, you look at insurance, you look at a whole range of them, with the evolution of India's stack, bundled with a host of APIs and applications that really kickstarted the India FinTech story. We are just at the beginning of it. We started with the digital infrastructure layer for peer-to-peer transfer of money. Look at Unified Payment Interface. We've seen huge growth in the month of September this year, 21, 3.65 billion transactions worth about 87 billion were processed through the UPI. It does more transactions than Amex. UPI has just been there for 4 years. Amex has been there for 4 decades. And
tell me what you can do through the UPI. Give me some examples.
So the UPI enables you to do payments directly from your mobile, and at the back end, all the banks are interconnected. So I may be having my account with the State Bank of India Somebody else may be having account with the Standard Chartered bank, but I can use my UPI to take money from my account and transfer straight on that. But it's a platform. And on top of the platform, we've allowed private sector entities such as Google Pay, Samsung Pay, Phone Pay, Paytm, all to grow and flourish. And this has greatly simplified the process of transfer of money straight from mobile. The system has been so robust that during the pandemic, it worked without a hitch. And I have not used my ATM or my credit cards for over 1.5 years now. And I've just been using my mobile to make my payments. And digital payments have really grown in last year in 2020. Transactions grew by about close to 90% as compared to the previous years. And today we have over 400 payment startups in the country. So mobile, digital wallets, gateways, POS machines, mobile POS subsegments all account for over 50% of the payment startups in India, and all because of UPI. So what we've seen is huge amount of digital payments using the mobile.
Fascinating. I know that previous strains in India's banking system have stopped credit growth in the country for a few years, and fintech enabled cash flow lending and other lending models that leverage data. They're opening up credit lines and to businesses that previously couldn't do that. So how significant do you see this shift, and how do you see it impacting business and credit growth going forward?
So, the data ecosystem offered by the regulatory sandbox and innovation sandbox has been a great pull for fintech companies to try out new solutions. India has close to about 63 million small and medium enterprises. They contribute close to about 30% of India's GDP. Access to credit has long been a major constraint to growth. Nearly a third of India's MSMEs are engaged in trading activities. Now, traditional lending models, however, excluded many of these MSMEs, away because as they existed in informal and unorganized sector of the economy. Now, these businesses often resorted to very expensive informal source of credit or were unable to access credit at all. And this had really stymied their growth, totally constrained their growth. Now, with the introduction of goods and services tax, which is one digital tax across the country, replacing 17 different taxes, that has accelerated the process of formalizing of India's MSMEs. So GST digitization, digital payment adoption, coupled with open banking data models, all have been instrumental in preparing the ground for flow-based lending models to address the credit needs of the MSME. So you don't look at paper anymore, you look at digital transaction. And on the basis of digital transaction, you look at flows, and on the basis of the flow, you can lend to the MSMEs. And this is going a long way towards enhancing credit flow to our businesses, especially the micro, small, and medium enterprises.